What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol OPEN for Opendoor Technologies. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be more of an update. We've covered it in the past here, and the main thing to discuss, really, is that we're moving outside of this overall range, right? If I do something like this, what you'll notice is we spent quite a lot of time coming from bottom to top, respecting the top, coming to the bottom, respecting that, back to the top, respecting that, but so on and so forth. You get the point, right? And what we finally started doing over the past week and a half or so is getting some traction back above the top end of the balance. We tried, came back in, and now we're trying to do it once again. So I like what's happening with the candle close above 20 now. The fact that, again, we are getting some positive traction outside of this prior range from in here. We'll see if we can make something of it. So here are some levels and scenarios to be watching out for. First of all, from the daily perspective, whenever we're dealing with ranges, right? So something like this is your range. When we break out of a range, we typically expect a range double. So we're looking for the same size range stacked on top. And that would bring us somewhere to about 2250. That would be an upside target here inside of open. So does that line up with structure? Well, absolutely, right? If I go ahead and clean that up, or actually let's just leave it on, you'll notice that if we do something like this, there you go. There's the top end of this prior structure as well. It would make a perfect target to the upside. So that's what I'm watching out for. What I need to caution you about, though, is if we take a look at the daily a little bit from a more nuanced perspective, right? Let's go ahead and just mention that we've been up 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row now. And again, it's not to say that we can't be up 10 days or 11 days or 12 or 13, but what it is to say is that eventually there should be some sort of pullback to keep this marketplace healthy, right? If we're going to see sustainable growth, we need a little bit of give and take, right? Something like this, stair-stepping to the upside. So the higher low pullback area, in my opinion, this time around, just has to respect this simple trend line. If we come in from this low and connect with this, as long as we respect this trend line, fine. Remain bullish inside of Opendoor. You can buy pullbacks into the support trend line as well, noting that we did make a higher high here. We would expect a higher low. If it ties in with this prior area of support at 1866, fantastic. We would be on the lookout here for any type of hammer candles that print, indecision dojis that print, basically anything that makes you question, right? Is this pullback ending? Can we flip long over the highs and get back up into some of those upper targets with a stop underneath the lows? That's how I would approach Opendoor here into the future as we move up and out of that range, which we spent the earlier part of this video discussing. So from the 30-minute, is there anything else we can learn about this chart? Not really, right? Maybe you could make the argument for a secondary support trend line, something that's a little bit steeper, and that might look something like this. But again, based on the nature of how many days up we've been already, I wouldn't expect this to hold indefinitely for the future, right? So maybe keep an eye on it. But again, are you going to place the entire trade against this trend line? Probably not. So those are my thoughts. If you enjoyed the video or learned anything new, definitely let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.